Bruce, one of the things that I get a lot of, and Bruce with Onward Mortgage, is a lot of people saying, you know, Joe, I'm going to wait till rates drop. I'm going to wait till rates drop. I'm going to wait till rates drop. And that kind of blows my mind. Can you kind of dig into why that might not be the best strategy on the mortgage end of the business, and what you're able to do if they don't wait and they choose to make that decision today?
Yeah, this is a great question. It comes up a lot with all the clients that we speak with. Is now the time to buy? Should I wait till rates come down to make a decision to buy that right home? There's a lot of things that play into this when clients are looking to make a decision on buying a home and win the finance. The most important thing about buying a home is finding the right house, the right fit. And when that house comes available, it doesn't matter what rates are. At the time, if you can find the home that fits your family and the need for your family, my answer always is to them to buy the right home, and we'll constantly monitor the mortgage to make sure that we put you in the best spot possible. You're kind of dating the mortgage, you're marrying the home. And so with that idea is find the right home that fits your needs. And from an interest rate perspective, we can track this with markets and volatility. Just like we mentioned previously, rate cuts don't always indicate rates dropping. There's a lot of things that go into that. So trying to gauge the right time to buy a home isn't the right decision to do that based on rates. You have many factors. Typically, when rates do come down, that typically makes homes more affordable. And when homes are more affordable, you have more buyers in the market.
Yeah.
More buyers in the market typically drive up home prices, right? Because you have more people competing for a home based on availability and also based on comfortability in payments relative to lower rates. So it's not always the right time to buy a home based on when rates are going to change. It's about the situation that you need for your family, the circumstance that you can be put into. And typically in a market like we're in today, where maybe rates are considered higher or in the higher range of the spectrum, you're going to have less competition to buy those homes.
That's exactly right.
Typically makes it easier for you to negotiate and get a better value for the home that you're buying.
Yeah, there's statistics that say every 0.25% that rates drop, another 1 million buyers show up, right? And so if another 1 million buyers show up, right, and that's a national statistic, that's not necessarily strictly Metro Detroit, but if another 1 million buyers show up, now you're competing with a bunch of other people. Now you're going to need more cash from an appraisal guarantee perspective, because you might be in more multiple offer scenarios, right? Your ability, your need and financial situation increases considerably, because now you have to do things that you don't necessarily have to do at that higher interest rate, kind of market where there's less buyers actually there. And you've had this experience. Can you talk real quick, let's just talk through the COVID rates, for instance. Did you have anybody that may have refinanced 1, 2, 3 times as those rates kept coming down? I imagine that's true, right?
Oh, that's a great question. Yeah, I mean, there were times where I had clients that we did 3 or 4 loans for the same calendar year, right, or over a 12-month period, because as you start seeing the substantial drops in rates, 0.5%, for example, or 3/8, if you could do that at no cost or very relatively low cost, why wouldn't you do it? Why wouldn't you, right? And that's part of being proactive and monitoring that for clients. Thus, going back to the fact that it's always the right time to buy the right home. We'll monitor the rates and make sure that you're in the best spot possible.
Yeah, and I think the biggest thing too is when you are in that home, you've eliminated variables at that point, right? The only thing that can go up on you is taxes, which are capped in the state of Michigan, and your insurance rate. Everything else is fixed. So you've locked in your principal, you've locked in your interest, and the only thing that can happen to those two things is they go down when you get that call. Hey, I can drop you 3/8, I can drop you 1/4, I can drop you 0.5%, and it's no cost to you based on, kind of the formula. So if you have any other questions about financing or anything mortgage related, go ahead and give Bruce a call. And if you like this content, please like and subscribe to our channel. Thank you.